All right. Good afternoon. This is March 7th, 2023, and it's about 4:45 p.m. Pacific Standard Time. So I'm doing this video late because my power went off this morning, somewhere around 7 o'clock. I was actually talking about this area entering into the market at that point, going down and buying some put options, but my power went out, so I couldn't do my video. I do have my laptop, I've got my phone and the hotspot, so I had internet and I was able to trade without a problem. But I couldn't make a video. So anyway, I'm making a video now. Power just came on recently, and so now I'm making this video. So too bad it's not live, but it's okay. I can still show you what I did, and then tomorrow morning I'll have one that's live if I do day trade. I don't trade every day. Day trade every day. Okay, so we'll start with the SPYs because that's what I trade, the SPYs, which mimics the ES. It kind of piggybacks on the ES, which is the S&P. And then you're probably wondering what this is right here. So if we look at a longer term chart, like a 4-hour, these are the balance areas, that I trade. And here's a balance area here. Actually, this could be extended down, and these do change, according to how the market moves. So the balance areas do change. They can grow. They won't shrink, but they can grow. So anyway, here, that's what this box is here. And if you look at it in a 5-minute chart, which is my day trading chart, that's this box right here. It's the same box. So I do use this for support and resistance sometimes when I'm day trading. So these are important. And I'll look at longer term charts like the one we just looked at when I'm day trading, because this way I'll know where the market sentiment is. And right now it's going down, and I feel like it's going to continue down. And it's got a strong downturn trend starting right here. I had talked about earlier in my other videos for longer term traders how I thought this market was going to play out. So as far as day trading goes, back to the 5-minute. So it built this little balance area. That was even before it did all this. And the way I would trade this is, when it starts bouncing around like this, and when it starts coming, hits on the top of this area quite a few times, I would buy some put options here. Now that's believing that this market's going to go down. Today was pretty obvious that this market was going to go down. So you would place your order somewhere around here, and then you would place your stop here. Now the stop that you can place either a hard stop or a mental stop. And most of my stops or options are mental stops anyway, or they all are actually. So I would place a stop right there just to let me know in case I walk away from the computer for a few minutes or whatever. And it's there. And in case it hits that stop, the market decides to go the opposite way, then I will have to decide to get out. Actually, this, that's right. That's what I did today. Because I was looking at this. This developed later. So when the market comes down and then it starts to come down this area, you have to decide how much money. If you've made, let's say, $1,000 from this move to this move, that might be good, because in this day trading, you have to decide where you're going to get out. Getting in is one thing, that's half of it. The other half is getting out. You don't want to get greedy. So let's say the market went from here to here. You made your $1,000 or $500 or $200 or whatever. You got out and you're good. And you wait for the next move. Here's another balance area that was created right here. So there's going to be, here's another balance area. There's plenty of balance areas that you can trade from. So you're not going to miss out. There's never not an opportunity, always an opportunity, several a day, every day. So, there might be some days where there's not much trading, where the market's just kind of bouncing up and down, maybe 20 points, but that's pretty rare. Something like that happens, especially now in this environment, so much volatility. Okay, so back to this. Purchased up in here. Market came down. I put my stop here in case the market decided to turn around and came up, and that's exactly what it did. So I hung on to my position only because I knew this was going to be a strong trend down. This is obviously a trend down day. Trend down means that it starts from a certain place and it just goes straight down instead of coming here, going up and then down. Nope, it just kept going and going and going. So trend down day today. So the market did come up here and it started to come up in this area, and I was watching that, but until it actually got up in here and hit this, I was going to get out with a loss, small loss between here and here. So you got to make sure that you're going to get out. Now, because I know this trend is down and I felt it from the very beginning, I kind of knew that this wasn't going to go up very far. And if it did, I'd have to decide whether I was going to stay in the market or not. So sometimes you do break your rules only if you're pretty sure. But, if the market continued up in here, you definitely have to get out. You don't want to take a big loss on these. No big losses in trading. So big gains, yes, but no big losses. So the market continued down. It came up here and it eventually came down to about this point. And then I decided I was just going to get out, and that's what I did. I got out around here. So I made some pretty good money on this day trade. If you want to look at my other video in longer term trading, I actually bought some put options up in this area. And that was yesterday, I believe, going down, and for a longer term. There's like April's. Now these here, when I buy put options, you can look at my option video for day trading. So I'll show you what I did. So here's I don't know if you have the same charting system like I do. I have Thinkorswim. So you click on charts, this tab here, and that brings up the charts, and then you click on trade, and that will bring up the options. Okay, here we are in trade. So you got to pick your month. Always pick something that's gonna, right here, this is March, obviously March, and in parentheses, this is the expiration. So definitely not going to pick that. I either pick one of these, and I usually pick this one here. Now, I don't really have to look at these other ones for volume and open interest because this is the SPYs. I mean, it's probably one of the heaviest traded ETFs out there, so don't really have to look at the volume. But anyway, and here's my long position right here. But okay, so this is the one that I bought. So what you want to look at is I always buy at the money. And again, I mentioned this in my video, that wherever the market's trading, right now it's trading at 398. And you come down here and you go 398. These are the options I'm going to buy on this dividing line on here, either 398 or 399. And I look over and I pick one of these. Now you can tell how much it's moved today, quite a bit. And you can see the volume and the open interest. That's plenty of volume and open interest, enough to get in and out immediately. So you don't have a problem with buying because you have plenty of sellers. You don't have a problem with selling because you have plenty of buyers. So I get in and out really quick. So you pick one of these and you click on it, and then you just say right here, you can click buy and then single, and it takes you right into your platform. So I don't really use that tab. I use my phone. My phone's a lot quicker, and then from my phone I can just set my stop right away when I'm going to get out, because I always set that right away. I always put an order in to get out, and then all I had to do is just push a button, and that's it, and I'm out that fast. So I always put market orders in, no limit orders, always markets because I don't care about the pennies. And I explained that in my day trading video too. So that's it. I'm in the market. Market comes down and goes down here. So I usually, how many contracts do I buy? A minimum of 10. But usually I'll buy 30, 40, sometimes 50 contracts going down. It depends on how I feel about the market. If I'm pretty much sure, like I was today, where it's going, then I'll just load up on those contracts. And then the market comes down here. So I'm not going to tell you how much I made. I don't think that's fair. But if you look at the S&P, and since I got in somewhere around here, and the market came down, let's say that's 40 points. I gained 40 points on that. That's quite a bit of money that you can make coming down, especially if you're buying, even 10 contracts. That can be even 10 contracts. That can be $4,000 from here to there. And if you're buying more than 10, you can make some pretty good money on this. So that goes to show you how much you can make. Now, when you're first starting off, if you only make, like I said, 200, 500, maybe 1,000, that's great. Because don't worry about that. You want to build up this these habits of not being greedy, of being careful about creating a habit that's going to be very functional for you when you're trading. Because if you create bad habits, the next decision you make is going to be based on that bad habit. If you create good habits, then all your decisions from that point on are going to be based on those good habits, and you're going to make some decent money, and then work your way up. Start off with a couple $100, maybe $500, and then after that, work your way up to 1,000, then 2,003, and sure, you can make 10,000 a day. That's not a problem, but you have to work your way up to that. You can't start from zero, make $10,000, and then all of a sudden expect that again the next day, because you're going to give it all back, just like a casino. I don't want to compare this with gambling because this is not gambling. It's only gambling if you don't have your system in place. Okay, so enough of that. Anyway, that's where the market's at. The market's here. What do I expect for tomorrow? Tomorrow, I expect this to continue down. 4-hour chart. How far? Eventually it's going to go all the way down to here. But I mean, for tomorrow, I'm guessing that this market's going to come down, at least hit this line, or maybe this line here. I'm guessing this line here before it has another retracement like it did here. And in the meantime, when you're day trading, what I do like about day trading is you're in and out the same day, so you can sleep at night. Now, even though I have my positions here, I'm not concerned about the market coming up. And if it does, I'll get out. But I'm not losing any sleep over it. All right, so I don't want to get away from day trading. So this is day trading video. Okay, so that's it. So tomorrow, check back in with you to see where we're at and see again. I trade these balance areas. That's all I use. You'll notice I don't use any volume indicators. I don't use moving averages. There's no candlesticks. I don't need that. This is all I need right here. Now, after 24 years, yeah, it's taken me a while to figure that out. I used to use all that stuff, the candlesticks and all that, and I would lose money. And sometimes I would make money, lose money. It wasn't consistent. This is consistent, very consistent. As you can see, the market always makes these balance areas right in here, here. Here's another one, all ready for tomorrow. Okay, so I can't stress that enough, that this is very simple. I don't have a lot of lines of resistance and support. Sometimes I do, and then if they're up in here, I take them out because I don't want to be distracted. I only want to see these lines here, balance area. That's all that's important to me. That's how I trade. All right, that's it. So we'll talk again tomorrow.